Greetings, Dr. Jeffrey Scott. I am doing this from India, and to say that I'm technology challenged here would be a big understatement. I am going through back to back weekend weddings, and there's similarity and big differences between a big Jewish wedding and a big Indian wedding. Um, I can tell you that the Jewish wedding did not have Jennifer Lopez as the headliner. This is a crazy wedding in Udaipur, India, and all I could say is wow. Talking about wow, what a day on Friday. But I have to ask the question: did this change the narrative? Again, it's November 21st, 2025. This is Dr. Jeffrey Scott, Market MRI Pro at gmail.com. And my Google group is called Top Down Trader. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of this video and all videos I do is to show you how I use my tools for top-down analysis. If it involves risk, you are solely responsible. I may own and intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And I do have tools in multiple platforms, and so happy that my Market MRI Pro tool was the launch tool with Metastock version 20, which was launched this week. Um, if you're looking for the wealth charts video, probably won't be one for another week as I've been on the road, so I haven't been doing them. My Google group is called Top Down Trader. Just sign into Google Groups, go to all groups, look for Top Down Trader, and let me know how you want to be contacted. All new folks are put in a moderated fashion. We encourage people to post, but some people keep posting spam about air vents. So because of that, I moderate all new um, members and approve their emails. And once they've done a couple that make sense, I take them off moderated status. Is there a recession in our near future? This is a critical question because we've had no economic data for the last couple of months. It's starting to trickle in. It will trickle in more this week. The Fed's got to make a decision in a couple of weeks about to cut or not to cut in December. And that's something that the odds have been all over the place. And then if we have a recession coming, you have to be more concerned because bear markets in a recession are much worse than bear markets in a fundamentally strong economy. We know that the yield curves were negative across the board. This is the 10 minus 3 month. This is the 10 minus 2 year. We know that they've crossed above the zero line, steepening yield curve. But what we have to recognize is that every time this has happened, going back to the early 80s, it's been followed by this gray bar, which is a recession. So, of course, we have a recession coming. And next year, in the second year of the second term, is kind of a natural place to expect it. Something to be on the look for. We don't have one yet. Do we have credit tightness? Well, if I gave a very short term look here, you'd start to see credit is getting tighter. Why is that important? Because tightening of credit is associated with the recessions. Now, we don't have tight credit right now. It's come off the bottom. And then one thing that's positive, we did get the Philadelphia Fed Diffusion Index this past week, 2 days ago, and it came in at minus 1.7. Why is that important? Because it seems that recessions come in with this being below minus 20. So maybe that can help us breathe a sigh of relief. Now, in yellow, you're going to get some data that I just don't know what to do with it. What does September PPI mean? It's months ago. The economy has probably changed. Retail sales, case shoulder, durable goods, all in yellow are old data. We will get new consumer confidence for November. We'll get some durable goods that are delayed and some jobless claims on Wednesday and then on Friday, PMI. So I don't know what to interpret, but if the economy seems to be stronger than expected, it's good from a recession front, but probably not good from a rate cut perspective. And I think that's going to cause some whipsaw. If you look at earnings, obviously it's a lighter week with the Thanksgiving holiday on Thursday, and Friday would be a light day typically. And you could see we got some earnings, Best Buy being one, Burlington, which was up a lot this past week, another that will have earnings coming up. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Once again, if the audio sucks today, I apologize. I have major technical difficulties here, and I'm using my Apple EarPods, and I've not had much success with them, to be honest with you, doing this. All right, so let's go take a look at the charts and let the charts do the talking. Strong day on Friday. Russell up 2.85, Spider up almost a percent, Diamonds a percent, Q.75, dollar was down. Gosh, is Bitcoin being slammed? 10% for the last 5 days, probably close to 20. We can look at it over the last couple of weeks. VIX down 5.47%, which just shows it was a good day in the market. We're still negative on the new highs minus new lows at 52 weeks on the NYSE and the NASDAQ. You want to see breadth thrust? We went from no positive sectors to all sectors positive in the S&P 1500 and then NYSE and almost all in the NASDAQ. We went from very few positive industries in all three to almost all positive industries. And if you look at percentage of stocks up, 93%, 72%, and 84%. So massive improvement in breadth, but does one day matter? If we look at one day change, see materials, healthcare, discretionary, all about 2% or higher. Interestingly, technology, all of them were up in the S&P 500, but technology near the bottom with utilities and energy and staples. So still looks like rotation out of that big cap tech despite NVIDIA's beat and raise. What worked on Friday? Look at construction, up 5% on Friday. Again, I don't pay much attention to cannabis. Biotech remains some of the strength. Retail showed some strength. Look at Walmart, transports, biotech, leisure entertainment, video games. A lot of things led. And what lagged from the theme perspective? Lithium, clean tech, uranium, aerospace defense, data centers, those tech things that had really been leading the markets. Over 5 days, if we look at what we saw in the week, you could see that over a 5 day period of time, there was only about five things positive: biotech, home construction, biotech, cannabis. That's it. Was the only things positive on the week. So it was a tough week, a nice recovery on Friday, and it does beg the question, what comes next? Timing model benefited from Friday. The weekly, we were getting close to flipping to a sell on the Russell, but we had a strong recovery and we closed above the WMA on all of them. So even though their bongos have turned red, it requires both features, which is the bongo and to close below the 30-period WMA to turn a sell signal. So the weekly, the longer term, still in an uptrend. The daily, did it get fixed by one crazy day in the market? No, and you could see still in a sell signal across the board. There's a long way we have to go to get above the WMA. So I'm going to leave us in pullback and uptrend. I still think we have a pullback under pressure. And as we look at the major indexes, I'll tell you what I expect to happen, although no one knows what's going to happen. Anybody that says they do is well, either liar or can see the future because nobody really knows what's going to happen. No one can predict what happens in Ukraine over the weekend, um, what happens with Israel and the surrounding states. There's so much that can happen that predicting something over a weekend, um, it's fun, but we always have to recognize that humans can't see the future. But what do the charts tell us? Because that is something that we have. So you're going to see I added a new moving average, and that's because I noticed when I was playing around that all the major indexes did the same thing. And that is they pulled into that blue line, it might be purple on other charts, which is the 100-day moving average. If we change this to the same purple, I guess that is the same purple. It pulled in to the 100-period moving average, in this case a daily, and it bounced. So that is my new line in the sand for the spider. Now, how will I know that we are all clear and that it's safe? I think if I take that line out, I'll feel pretty comfortable, which is the recent high. And if I take out that to the bottom, I'm going to be pretty nervous. So I do think we still have something to prove here. And it wouldn't surprise me one iota to find out that we are going to do this, which is trade right up into this prior high right here. And then I think that has to be a possibility. So I like, as Ian taught me, the high, medium, and low road scenario. High road is, hey, we go on to new highs. It's November. It's a holiday weekend coming. It's December after that, the strongest time of the year. That's very possible. What about we trade up, go sideways into the second week of December, and then we break higher or lower? I think that's the middle scenario. And the low scenarios, we probably still going to trade up beginning of the week and then we break down. What do I think happens? I think we probably go to set new highs because of the seasonality. But there's still risk in that data, and there's risk in a Fed meeting. So I'm not going to be going all into the long side until I take out this line here and hope that we don't have a false breakout. And I'm probably not going to start adding to my contra ETF positions, which I covered for the most part early in the day on Friday until we break below there. And it wouldn't surprise me to put a bearish flag in here and move higher and then fail. So I think we have to be open to all the different possibilities as this market runs its course. Seasonality, positive. We're at nice support at that 100 on the spiders. Now let's look at the others and see why I put that on the charts. Look at the Qs. Pretty much sitting, closing right above it, traded below it, but closing right above that 100. And I think it's the same thing. I'd like to clear the high of this day, which is about where that 17 is, and not drop below the low of Friday. And until that happens, I'm not going to make a big bet either way. I did add to long positions. I've got a TQQQ just in case this market rips from here. I've been in LABU, which has been a great performer. I added to Amazon on Friday, which had a nice session. If we look at but I'm still sitting on a ton of cash because I'm not sure to trust this. Diamonds, same thing. Look where we fell right to the 100-day moving average. I never put that on charts, but sometimes it works. And actually, I do have a platform that actually the 500 to 1,000 days because they've all been touched during my trading time. So similar story here. We pulled back. You'd expect the bounce here. We will see. This is the diamonds. All these were up nicely on Friday. And then perhaps the star on Friday was the Russell, where we had a big intraday reversal. We opened down here, kind of felt like, oh no. And then we closed much higher. Seasonality is okay here. And again, right above that 100-day moving average. You'd expect that 50 to be resistance. And so I don't know if I expect us to break through on the first attempt. So I think that short term, this is a big improvement. Whether we break out and go to new highs, which I think is my thesis, I think you have to be careful here because just because I think that and hope that doesn't mean it's going to happen. And that's why I'm going to keep a lot of cash on the side. If we look at volatility, I wanted a spike higher and a return. Well, we opened here, traded a little higher and closed lower, but not at the bottom of the session. So that's great. That's a big improvement. That was down, was it down 11% on the VIX futures, but we're still elevated. We're still not down to the resting rate. So we're not necessarily out of danger. And then the dollar did come back some as the market picked up. You could see the dollar was down here just a tad, down 0.07%. So, and as we know, well off the high. So, I, my premise is that we have hit a short-term bottom. Do we trade higher for a few days and then see if we have a bear flag or we break out? I think that makes sense to me. I think if we lose support at the 100, I think the argument about the 200 gets a little bit stronger. Um, I'm not ready to go all in. Um, this is not the April 7th bottom, where it was an obvious thing because of how oversold we are. This looks like a technical bounce coming. I'm not sure we're done going down. Commodities, take a look at those real quick. And we could see both gold and silver are pretty much trading sideways above the 50, sitting on the 17-day moving average after coming off all-time highs, both down a little bit, 0.16 on gold and silver on Friday, a little bit more down 1%. But neither have broken down. They're just consolidating after all-time highs. Oil is struggling, falling. Natural gas a little bit stronger, and you could see that both the 10-year and the 30-year were down again, which is great for equities. 10-year was down almost 1%, and the 30-year was down. Actually, looks like yeah, it's got to be down here, 0.32, 0.36. So improvement in rates, which is great. Dollar down, all these things are positive for the U.S. markets. Buckets. Again, we came off of an oversold area. It wasn't massive oversold, but we talked about that previously. We're still a more bearish picture on a longer term perspective with more stocks below the midline, but we had improvement. If we look at market breadth, interesting, opened at the prior close and traded higher the rest of the day on the NYSE. Less bullish of a candle on the NASDAQ composite, but certainly doji-ish, which suggests indecision, and it could be an area of a natural reversal. Notice that stocks above various moving averages turned up, and although the new high, new lows remain negative, the AD lines and the up-down volume are positive. On HTSI, we did see a Phoenix, which is a bearish signal on Thursday, but we didn't see anything on Friday. We don't see anything here. And I remind you that we are still living in the land of a cluster of Hindenburg omens, which historically have been bad for the market. So I think it would not be unusual here, unexpected to see the market rally for the next couple of days into the holiday, maybe even after. The question is, can we break above those 50s, or are we going to go down towards the 200? And I don't think that Friday's major day changes anything except it gives us an intermediate bottom. If we look at where the strength is, you can see how materials have started moving higher, as have communications. Energy pulled back a bit this week. Staples, low Staples came off the bottom. Technologies pulled back quite a bit. Industrials not doing much. Financials struggling. Um, Healthcare remains the big winner. It really does. And if we go into the larger breadth, you'll see a lot of positive signs. Interestingly, let me make sure it matches up and got all my data. On the NASDAQ composite, we didn't really improve much in the 13-week new high, new lows, but there was dramatic improvement in the spider, in the S&P 1500, and in the Russell 2000. Um, Other than that, you can see stocks above the major averages have increased on each of the four indexes here. Your AD lines turned up. We'll see if that continues. And the RSIs look like they're bottoming. So, again, we'll emphasize too early for me to tell if this is the beginning of a new rally. I expect we go higher into the holiday week, but that 50-day is going to be a line in the sand, and the recent highs before that. Um, I hope we go to new highs. Wouldn't surprise me, but I'm not that committed to that being the only outcome. Again, you have to look at multiple scenarios and plan how you're going to play them. This is just the timing model applied to the various sectors. And what you might notice is we only got two that are positive. Interestingly, staples turned positive on Friday. That's really not a happy scenario because when do staples excel? Yeah, in bad markets. And the other one that's doing great is healthcare. Other than that, every one of the sectors is down. And look at Bitcoin. On this bar here, this is I'm sure what this is Greystone, or Bitcoin was at, by this metric, traded up to about 56. Bitcoin down here had a low of 36. So that's 30 out of 56. Um, 20 points out of 56. It's almost a 40% decline. Imagine if we saw 40% in the major indices. Is it likely? No, not unless we're in a bear market, but wow. All right. So since the buying window is crept open a little bit, where might we be looking? And I think this is where top-down analysis is really helpful because it's going to show me what's been working in the market. So let's go into first we see we have 3,784 stocks in our universe, which is very different than the S&P 500 and 1500. Includes all stocks in the NYSE, NASDAQ, and Amex that are over a dollar and trade 100,000 shares per day. If we go into the top down, let's just look at percentage returns. 3.42 on staples, healthcare 2.6, and basic materials 2.1. Let's focus on those. All right. We have These are the various industry groups in those different sectors. And interestingly, although pharma is strong, just look at Lilly. It was the only one that was down on the day, and one of the in these sectors. We proved that. We go here, only one down. These ones that are up. Well, let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's still a lot of medical up here, which is one thing. We got 767 stocks. Now we can look at percent return, and I get nervous because a lot of cheap things will come to the top and things that may not have a lot of volume. So let's put in a $5 and $500,000 filter. Take a look at what we have. And now you can see we got 372. And we could start looking at these and see if anything looks like it's actionable. So Personalis, I believe that's in the genomic testing space. You can always click on fundamentals, see when the next earnings are is February 26th. See that we've had some good changes on earnings, not so much on revenue. We can highlight what's going on. Cancer genomics company, think Tempus as another example. I don't always know if I should set these at the highs or I set them at the bodies, but I don't think it matters because we broke out of a trend line there. We had decent volume, breakout momentum, good relative strength at OBV. That's Personalis. AZTA is Azenta. Oops, hit it too many times. Just let this reset. I live in the I hit things too often disease. Come on. There you go. So this is another healthcare company. I don't know it. I might put that there. Life science, sample exploration management solution for life sciences, blood management, laboratory biospecimen. Don't know anything about them, but they broke out of a horribly long downtrend. This gets me really excited. So now I want to figure out what the heck happened here with that massive earnings growth. Um, Revenue does not look great, although it surprised to the upside. Look at the surprise on that earnings. So now we have to go look at the news. Head to head, Viva and Azenta. You can read their earnings call and understand whether that's something that makes sense. Um, I don't know anything about this company, but I'm intrigued by what I saw from their earnings. Um, Next one down, QDAL is another one in the same space, a little further down in their pattern. ADPT is one that actually is on my buy watch list, and you could probably see why. It is, look at that relative strength, look at the volume. Is it getting extended? It's getting extended. That's the only thing that bothered me. But I love the pullback and this massive breakout. And on next earnings are not to February 10th. They've got nice steady earnings that are positive, even though they're losing money. Earnings growth, revenue is growing. You can look at surprises. They make lots of earnings surprises, lots of revenue surprises. ADPT looks very interesting to me. It's probably my favorite of this group. Another thing I like to do is I like to add that pullback and uptrend filter to this and then rank them by my dots, which are different bullish impulses. RXST comes to the top. Don't know anything about RX site. I don't like buying things that are that far below the 200. Um, Rare earth or rare pharmaceuticals, um, Ultragenics, Doesn't make money. I'd have to know the story to be chasing that. MTH, this is a home builder, I think. Is this Meritage? Let's see. Meritage Homes. Now, I like Pulte better than this, but we did see a big move on home builders, which I thought was interesting. So I typically will go down this list. Coopers is another life sciences company. Um, Again, steady earnings per share growth, steady revenue, breaking out above the 200. Um, I'd rather, considering all these that we looked at, I think I still like um, the one I still like the best is, all right, now I'm having a mental block that we just looked at. Hold on. Let me go out of this filter and go back to the percentage moves. Is a DPT. All right. So just looking over at the industries there, travel services, medical diagnostics, biotech, specialty retail, medical devices, residential construction, restaurants, auto parts, very much a shift away. If you're looking at those top 10 industries from the data center complex, the uranium, the electronics, the um, different companies involved in the nuclear space. But that's market rotation for you. Why top down investing makes sense. Now, I also can't help myself and I do bottoms up. So let's just clear all this stuff in here. In fact, let's just hit that. And let's go back to the impulse indicate sheet. And so now I'm going to look at my here. Come on. I don't believe that that's 767 stocks. Do I hit the right base? Go back here. There you go, 3,784. And what I like to do is go to my go-tos, my A plus scan. This is my favorite scan to find actionable stocks. Let's take a look at some of these very quickly. BCAX, some low-cost biotech. Now, if I keep with what I like to do, you could certainly draw something in here showing a fresh breakout. I don't know anything about this. The fact that we don't see fundies, it's a small stock, probably a recent IPO. CVBF, um, breaking above the 200, uh, minimal earnings per share growth, pays a 3.77%. So is this a regional bank? Bank holding for Citizens Bank, a mid-sized bank. All right, click a semiconductor stock. Earnings must have come out 11/19, 26% surprise on earnings, 4.5 surprise on revenue. Um, Interesting mark there. Gap up on earnings. Look at the blue dots. And by the way, the A plus scan is most noticeable that you have two momentum dots in a row, also called a kahuna, although it's a variation of a kahuna. And you're breaking above on relative strength in OBV, and your high low jump is not extended. Mattel, think about those consumer staple stocks that are starting to lead, and you have decent earnings, although not much growth. Negative surprise. Earnings aren't out to February. Did something happen here? WBD withdraws bid. Why is Mattel up? You could certainly click on Zacks if you wanted to know what was going on with Mattel. Um, notice these are different names that we have been seeing for a while. MMS, which is a Maximus, another. I always thought this was a semiconductor, I guess. Again, you just have to go through and see if there's any recent health plan enrollment services. All right. A leading employer and provider of government services today announced it was selected to continue administering enrollment assistance services. All right. Don't like this one as much. Pretty steep pullback. Hasn't taken out the 50 yet. Neogenomics is in the same class of a lot of those stocks we looked at in the beginning, um, like Adapt, like like Keras, like Tempest. See, we get that one to pop up here. Breaking out after a little base here, after a run up above the 200, strong relative strength. Um, Even though the earnings decreased in October, it was a positive surprise on earnings. Revenue is growing. That looks okay. And then Arcus is a biotech stock that seems to be doing extremely well. And remember, with biotech, you have to wonder when they have data coming out to take Merck on in cancer treatment. Okay. Make sure, do they own their drugs? Do they have partnerships of what's going on? So you have to do a little research because these aren't about for earnings announcements. These are about earnings announcements, scientific data presentations, potential acquisitions, and then when something in their group gets bought, they lift as a whole group. And so one way I've avoided name risk, because sometimes their drugs don't work and they crater, is I have been using LABU as my trading vehicle for biotech, and you can see it kind of looks just like Arcturus, doesn't it? Nice run. The benefit of LABU is they don't have earnings announcements. They don't have um, individual company data risk. They go up and down with the sector, and every time there's a buyout, the sector goes up, and so does LABU. And then lastly, let's just look at my A screen. This is a little different. This requires a pullback, and then it requires coming into out of a squeeze, at least one momentum or breakout signal, relative strength crossing above, and OBV crossing above. So here's AXL, American Axle, living on the 50. AZTA. I'm just going to go through these very quickly and see if anything looks interesting. I think we looked at Azenta already. Another regional bank here, BANC, Bank of California, BFH, Bread Financial Holdings, I like the name, but BTSG. Oh, that looks good right now. I mean, I'm looking for growth. Big move up, and with the market issues that we've had, we had a pullback, but we had a breakout. And a breakout with volume, breakout momentum from a squeeze relative strength and OBV. And I might put this as my second favorite after that Adaptus that we talked about earlier. Look at the earnings per share growth, massive. Look at the revenue growth, the revenue with good growth, rather, surprises on both in October. I think that one looks really good. CNO, is this an insurance company, I think? Let's see. Hover over that, find it. Health insurance, annuities, other insurance. All right. COB, probably a bank. FNB, another bank. So this is interesting that the financial services are making my list all over. Holdings, healthcare, G3. I'm just looking for something that I want to maybe chase or get into. Haven't seen one besides the couple I've mentioned. Hub Group, this is one. In trucking, let's see. Supply chain, transportation, logistics management, trucking. Um, Not a tight pattern, but in an uptrend, broke out above the 200. Don't like the earnings per share growth. IEX, Massey. I just will go down the list. New is one I've had before, and this one looks interesting. Probably have to clear this area for me to get interested in here because it's sort of in a double toppy looking. PAGS, this is one that hasn't worked for me when I bought it at the turn of the market in April. Pod, Insulet, insulin delivery systems. That's not its chart yet. There you go. SBCF, another regional bank, Seacoast. Sono, audio stuff that you might have in your house. Let me go back. I messed that up by clicking too many times. Kind of like the pattern here. Big uptrend. You've seen this pattern before today. I like connecting the tops. Break out above this line, I might get excited. About 50 cents above where we are right now. Maybe I'm being too tight on that, but all right. UBSI sounds like another bank. Now, this one I might like a little bit more. Look at the earnings per share growth. It pays almost a 4% dividend. Surprise on the last two earnings, surprise on the last revenue. Um, Close that for a second. Put weekly on this. Yeah, look more interesting on the daily. We're breaking out on this area here, so I kind of, this one's interesting to me. Breaking out. All right, USB, another bank. What is this telling me? Banks, banks, banks. Valley, another regional bank. VSCO, consumer cyclical. WFRD, oil services. WGS, another genomic story, gene diagnosis. And lastly, ZGN. Don't know. I know they make nice clothes. And I kind of like what I'm seeing here. And a break above that line might be interesting. I like things that move up, pull back in an orderly fashion with the flag and break above that. So there are interesting things here. The ADPT, probably my favorite. BTSG looks interesting as well. The regional banks, there's so many of them. It makes me want to look at, should I look at KRE, just like LABU, but go for a ETF of regional banks? What does that look like? Yeah, it kind of looks like the regional banks. I mean, you've got down in the pattern, but you just broke out if you can close above that line. So regional banks maybe as well. So there's stuff here, folks. Be careful because the main question remains, where are we going? And I think, and I'll just finish with the high, low, and medium road scenario because I think that's how I'm going to look at the market. And I want you to be open minded as well. Do we trade up to the 50, break right on through, go to all-time highs? You've got this line down here that you're breaking. And so when you get above this level here, I think you've got a great story for a run into the end of the year. But what if we fail at this level? Do we drive up here and then we just go sideways? And this could resolve down or this could resolve and up. I think that's the second scenario. And then the third scenario is we go into that and we just fail, or we fail at launch. What do I think is most likely? I think most likely we do that, but I'm going to be prepared for both the sideways move and the immediate failure. I'm not convinced we're out of danger. A significant break of these two areas to the upside will get me much more long. I am leaning long. I've raised cash. I cut back on my contras, and I'll take it a day at a time. I suggest you do as well. Thank you. Sorry for the sound. And just look up India wedding in Udaipur, Udaipur, and you'll see who's come to this wedding. It's more than J Lo. It is crazy Indian wedding time. Bye, everybody.